YouTube stream. And good morning, everybody. Welcome to Friday the 13th of October 2023. It's the end of the week and we've got our second webinar. So just doing a mic test. I think it sounds okay from my end. I did some monitor testing earlier, so I think it should be fine. And YouTube is up and running. Hey Marius, hope you're going well. Quickly do those... do that disclaimer. There's actually, if I quickly flip before we do the disclaimer onto the capture, you can see that iceberg that I posted in the room. So if I zoom back out, you can see where they put it, where they hinted here at 0730 that they wanted more. And you can see the structures that were in place so that, you know, if you'd found something to get in, you know, it's possible, you know, they've tagged it almost once, and it looks like they may tag it again if we have no more big volatility events. In other words, if we get orderly flow. So it's just one of those things. Let us do the disclaimer now. All Bookmap Ltd materials, information and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Trading futures, equities and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. So I think we can probably just leave this one as it is. You know, if it gets up there, you know, what we normally do at this point, the very first thing we do is have a quick zoom out vertically of the levels, which if you've got Bookmap, I'm sure you could have done yourself. You've got a round number level there at 4350 and up above. It's not clear where those levels are yet. So yeah, and we've got no major market making. I'm not actually sure you were seeing it. Sorry, so I apologise. I had the slideshow on top of it, so I had not hidden the slideshow. What I was saying was that if we zoomed out vertically, you've got this round number liquidity at 4350 with 300 bids there, but there's nothing really that obvious elsewhere in ES. And if we flick across to NQ, you've really got those algo bands which are dominating things, but underneath the algo bands you've got this resting buy iceberg down at 15255, and a round number, bit of liquidity we can ignore, and yeah, and you've got some round number liquidity up above. There's nothing until we really zoom out of any great interest, and that then becomes down at 15212. Which has been there since that low was in place. So maybe if we go back even further, look at the 15200, and I think we can ignore that. So there's nothing really earth-shattering there, you know, screaming out loud as something that is likely to be hit with a very high level of probability. Anyway, I hope you're all having a good week. If anybody has any questions, comments, requests, anything like that, please feel free to pop them into the room, either in Discord or in YouTube. Even though we are going to do the pre-market prep, I will try and just have that up and about and running. There we go. I like to have all the order book numbers, i.e. all the individual 25 cent type prices, quarter point prices in there, so you can see them all and you can actually see the true order book levels. Anyway, we'll leave that one be and let's go and do our usual slideshow preparation. Okay, I'm just still using the new format. So what we're doing right now is the prep context for today. And the context is there is some import prices at 8:30. Nothing major. 9 o'clock you've got the Fed Harker speaking. I'm just checking this is, yep, that's coming up okay in YouTube. And the most important news of the day is not during our hour, it's the consumer sentiment at 10 a.m. So it really should not affect us too much. Okay, let's keep going. On the daily, you can see that downtrend line that I drew in is still intact, and we're not actually anywhere near it. We've got that 50-day moving average a bit closer to it. NQ is a little bit closer, but so far we are holding. And what has been surprising is the bullish activity all week, or most of the week anyway, despite the war footing around the world, and that is apparently due to the softening of interest rate stance by the Fed and the Chinese stimulus, as I said the other day, apparently. But all we care about is what the market is doing and whether we have any trades there that will follow our trading plan. In contrast to the other day, Wednesday, ES has spent its entire Globex session in the bottom half of yesterday's RTH range, so that is a complete contrast. And the same with NQ. All right. Yeah, that's one of the reasons why, if you flick between these, that it's sometimes worth having this yesterday mid. It's especially the case when you've got an extended range in RTH, because that mid can become a little bit more important. Again, I don't believe in any of that Fibonacci stuff. I'm just saying that's a 50% retracement. That's all that represents. Okay, quick look at yesterday in the market, and you can see Apple had a good day, but nobody else really did. And in the pre-market so far, it's been pretty bearish across the big names, the Amazons, the Meta, the Nvidia, and the Tesla. And when I say pre-market, we're really talking about 4 a.m. Eastern onwards. Right. Onto the value. So this is the value that I drew for ES. I think it's ES. Yes, it looks like ES. Before the start of the ETH session. So I'm trying to take the broadest view of where value was in the afternoon, or the last value formation in RTH, and taking into context what has happened over the previous 2, 3, 4, 5 days. That's how I'm drawing it. It's really to show what is the most important value area for the time being, or the most important distribution. And the other one, I think this one, yeah, it's quite small, so I'm struggling to read it on the preview image that I've got. Pretty certain that's NQ, and yeah, that's where I drew it. It was easier to delineate because you've got that nice cutoff point on yesterday afternoon's value on the RTH session, so much easier. But it's also quite interesting to see that they extended all the way down towards yesterday's low, but that we didn't quite take it out. Okay, right. Okay, let's have a quick look at the capture. I'll come back to those last two slides in a second, but it's just watching this action coming in towards the 8:30 just to see what's happened. And one of the things I do like doing is zooming out a lot. So again, I do apologize for anybody if I do constantly do this when I'm doing the live order flow analysis. It's because I like to see more of the book. And when I say more of the book, it's really the vertical side of the book, just to see where the pressure is coming from. Nothing's really changed on these charts, by the way. I have the only thing I did do for this purpose, and I'll explain why in a bit, is that I reduced the volume threshold for ES down to 15, and the NQ one, I think I decreased it down to 3. There is a reason why, because we're going to go and look through some specific action around the London Open. I thought this was a good opportunity today because there is nothing major happening, hopefully, in our hour. Well, if there is anything major, we will talk about it live. Okay, now I'm just checking to see if there's any comments. There's a small echo when I'm speaking. That's interesting. Thanks, Stan. I've actually got a noise suppression. I've got the NVIDIA noise suppression on today. I'll speak a little bit more quietly. Maybe it's because I'm speaking so loudly. I'm testing it and trying to improve the audio quality of the stream, from session upon session. Yeah, I do apologize if there is any real echo. So I think it will probably cut down if I do not speak too loudly. Okay, just trying to get back to the Discord room. Yep, no, Marius is typing as well, so he's probably going to comment on echo as well. Yeah, so in ES, that resting liquidity is there. The thing is, because we cannot predict the future, we do not want to be greedy. So, if we had found, for example, a good entrance here, which is the test of this low, and we were trading towards it, or we'd been very aggressive and trade towards it earlier, you want to take your scales where you can. I can't really draw the scales on here because this is not where I draw my scales for my R multiples. I have traded directly off this chart in Bookmap in the past, and I did that for quite some time. But what I do these days is I do a mixture of manual entry and semi-algorithmic entry. So I've got both entries based on location, and one just gets me in based on some of the stuff happening in the book. So it just speeds up how I get in, and that's why, if anybody is asking, well, why do I not trade directly off this chart? It's just because I have this all set up in another program, Sierra. Okay, yeah, thanks. I'll move the microphone away a little bit, so that should improve things. Yeah, that's a bit of a shame because I tested it today. This is with some OBS filters. But it is what it is. Maybe if I turn down the volume a fraction on the input in OBS, that will improve things as well. So I do apologize. Talking about this sell iceberg, what I've said quite a few times now is that these often provide really good targets, and they're much better targets if they've got confluence with something else. Here we're almost setting up for a triple top. So you've got one top. Let's just scroll back, see if there's any others. Scroll all the way back. That's not really a top. But you've got 1, 2, 3 in that zone. So you've got almost a triple top. Certainly if we get back up here, I would say that there would be a very high likelihood we're going to attack it and go through it. But at the moment, they're just looking for fuel. So when they're looking for fuel, you're looking for a structural entry, and you're looking at this delta tail down here to give you an indication that they might have the fuel. And when we're talking about a fuel to go up, we're talking about consuming sellers. So yeah, the sellers, the red in the delta tails here, and the delta column is what I'm calling the delta tails, and tails really refers to the bottom half of this. Sort of towards the swing point, we're looking for a red tail. Not necessarily a particular shape, so I don't really care if it's, let's draw this. I don't really care if that tail in the delta column was like that. It's not a good color, is it? Let's get rid of that. I don't really care if the delta tail was like that, or whether it was like it does not really matter for this purpose, because this is not auction theory per se. This is delta, and the auction theory really applies to the volume profile, the CVP, the chart volume profile column. Marius, please tell me if that's getting worse or better when I speak softly and speak away from the microphone. Yeah, it is quite frustrating, I must admit, trying to get this audio improving and then not getting it improving, even though I recorded it several times today. So yeah, that's what I'm talking about with the fuel. Okay, so while we watch that, let us have a look at an image. I'll just get it up. This one, okay. In fact, we can have a look at both this and the market at the same time, or we can see part of the market. So if you refer back to Wednesday's webinar, where I spent quite a bit of time on the idea of modeling how you might perform in your actual trading against an expectancy calculator, which is really this row here, the expectancy calculator, which is the amount of dollars you'll make on an average trade over a large statistical sample set. what I didn't really finish was sort of, where I might model what I'm trying to do myself. And I'm not talking about actual results, I'm talking about aims, right? What I like to do with this, and I think I did stress this during the session, was that I like to model this at a really, really low win rate, because I'm expecting, in that I can expect, or I do expect, I'm expecting in myself to perform better than this 50% win rate. But I don't want my trading business to be dependent on a really high win rate. So that if I do model this at 50%, and I still have a good expectancy, a profit factor which is positive. There's two ways of stating the profit factor, by the way. It's either a percentage or a decimal number. If you use Sierra, that would be like 0.4 rather than 40%. But that is something in terms of the actual numbers that I would be very happy to aim for. And then you've got to really take your actual results from your trading engine. And you might have to do a little bit of massaging to get averages down so that you can see what averages in towards the -1, the -0.5, because you might have trades that are -0.3R, -0.25R, etc. So you have to round them up by averaging to actually get them to fit something that is a model that can be looked at a glance and be useful. Yes, I've got this number here of 5 for -0.5, and there's a specific reason for that. I mean, one of the reasons that we look at Bookmap is that we want to use the order flow in Bookmap to help us with our risk control. So if I get rid of this, we've always got this back, and I can go, I'll go back to the next slide. In fact, I won't, because I've got it over here. I've got the next slide on a tab over here. So you want to use these order flow tools, and it depends what you use. I use Bookmap, and I also use short-term candles, and that's the purpose of this chart here, right? So this one it's a 15-second in NQ at the London Open, and the London Open is over here. But what is the point of this, really? The point of this, and how this relates to the modelling of your expectancy, is that a lot of what we've been talking about has been the category of supply-demand known as the spring, upthrust, breakout, failure, swing failure pattern, whatever you want to call it. And one of the ways to see it is that, if you've got a swing failure pattern, for example, let's draw this because it's easier to draw. Right, so you've got a swing failure pattern here, right? And you're looking to short this. This one would have worked, right? And that's great, but they don't always work. That's the whole point. Let me just get that. So if you've got a swing failure pattern, and then the action, instead of this down action, you get, if I just draw the last swing high across there, and maybe we'll switch colors, so you get this kind of action. You get balancing action at or just beyond the previous swing point that you're saying that you wanted a rejection for, so that you could short. That, where are you getting that information from? You're getting that from order flow, whether it's this short-term price action on a candle chart, or more importantly, on Bookmap. We have to get rid of that. Let me just get rid of that. So, when you have this, you've got probably a good example here. Let's have a look at an example of where it would have gone wrong. Yeah, here. Okay, so if we draw with our numbers, I might need to get my pen out. We'll have a look. So you might call that a swing 1, and this one a swing 2, right? And you're drawing across from this swing point. I'm approximating because it's not a very good swing point, but it's just the first thing I could find on this Bookmap chart. And what are we looking at here? And we need to just drag this one across. Right. we're looking at the type of action. Again, I don't think it's quite there. We really have to drag this one across. Yeah, we're looking at the delta tails here, and we're looking at this balancing, right? So what I was saying that is if you have, if this was your swing point, and this is your swing failure, right? And then you've got this zippy, 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 zippy action. What you're looking at is this delta column, and especially the delta column in the zippy area here, right? Who is potentially getting trapped? If it's just small sellers and you can't see any great big red or magenta dots, and you can see a delta red segment here in that zippy area, that is not a good sign. And that's the kind of information that you're going to get from Bookmap. You're also going to get obviously the liquidity map. You're going to get rejection in terms of vertical lines, like that one's a vertical line and immediate rejection up, that kind of information. And you're also going to look at the microstructure. So if we get rid of all of this, you're looking, let's get the cursor back, you're looking at what's happening as it goes down, So you have, just draw this again. So you have a point here, you have another point, and this is all microstructure. And you see, how are they getting underneath that? So if we drew this one across, they're not doing very well, and then they're bouncing above that. So they tried to go down, they couldn't go down, they're bouncing above that. And in NQ especially, this is ES, but in NQ especially, in ETH, when they do that and they struggle so hard on the microstructure, and sometimes you can see it in the book pressure as well, but you've all probably got different ways of looking at the book pressure, whether it's the lighting up of the book or whether it's some form of meter that you've got, and they're struggling, they're applying lots and lots of pressure, but that's all they're achieving. That's a great big warning sign, to say that you're going to be wrong soon, and that's when you use that to say that instead of taking a full R on this occasion, you might be better taking a 0.5 R, or even a break-even scratch if you can. It's that type of information that we really need to get across. Just doing a time check because we've got the 8:30 news. I'm just moving that microphone across to see if it helps with the echo as well. Again, I apologise for the sound quality. Right, okay. So we're coming up at 8:22. We've got 8 minutes left, and let's look across at this iceberg. So they're lighting up all of this zone, and you've got this there, and you've got something which is clearly a double top, but not really anything more. But as I said, if we get back up to around about the 79, I'd say the probability becomes very high that we're going to go through that 81. And this is at this point where if you do some vertical scrolling, you can see how they're actually pressuring the book or not. Yeah, this is really quite slow action compared to what we occasionally see at this time of the day. The benefit of really, really slow action is that you can control your risk so much better, and also you're much less likely to be slipped in your stops and your entries than if we had the highly volatile NFP type action. Thanks, Paul, for the comment. Maybe because of the room. Yeah, I don't know. Again, all I can do is say I'm somewhat disappointed because I did probably over 40 tests on little bits of OBS recording and checking the sound earlier. So if people say it's an echo, yeah, both in YouTube and also in Discord, that's a disappointment. Again, I will do some more testing over the weekend when I get a chance. Yeah, so far that action is positive. Now, if we had NQ to help us on the timing for this, so the NQ had a beautiful spring. In fact, it's like a double spring. You've got a swing low there, and then you've got another little zone there, and it takes out both of them probably by a tick. So if we actually go down there, yeah, it takes them out by a tick, and that is an absolute beauty of a swing failure pattern type entry in NQ. And you've even got it's struggling for me a little bit. You've even got this nice heavy bank of algo-based liquidity underneath. So yeah, the entry there in NQ was better. Something that I've said as well is that with really slow days, with low volatility, the action in NQ may be easier to trade. You may have more opportunities. You may get more range and therefore scales in your trades in NQ than in ES. But here we've got something that it was likely to come up to. So it's really a question of how do you get in? So you have this move down, it can't get down again. So and you've got this liquidity kind of barrier here. It's partly algo band based. So you could at this point take an entry because your risk is quite tightly defined. So if we have a look, if you'd have got in there, you could have got in at the definitely at the 47450 range, and you've got a target of 7 points. So even if you are only looking for a 2-hour trade, and 2-hour trade is wonderful if you ask me, and you can always go a lot further than you think after it hits the 2-hour. The trade was possible. ES did give you many opportunities to get in, and finally we're going to get that tag. So we were expecting that one to actually get filled at 48125, I suppose it is. Yeah, 48125. If I zoom all the way out. Yep. And what they've done here just above it is clear out some of the liquidity. So it's providing a suggestion again that we would get up there. We do not know what will happen when we do. It's filling the iceberg a little bit. So previously there was a volume of 1 and now there's 132. So they're certainly 156. So they're certainly taking people on board. You've got that delta tail column and you've got the volume columns. So you can see how it's actually going. And if they fill it a lot, what would not surprise us is if you have a little pullback straight away. NQ maybe, I suppose we've got NQ over here. NQ is actually a little bit more interesting in terms of going straight through it. NQ looks strong. You can see the action there, really, really quite strong. If you look at the microstructure from this being the trigger onwards, they cannot get down. So every little swing low is higher. So they're exploring upwards. And right now they're bouncing but not rejecting from here. And you've got these two liquidity levels up above. I'm not saying they're resting liquidity, but you've got that one up at 15295. That's of interest. This type of action is also useful for when you're in your trade and you're doing well and you've achieved one scale, maybe you've achieved a couple of scales, and you're wondering, how are you going to manage it? So part of the purpose of this order flow stuff is to help you manage that. It's to say, have you had something that's clearly wrong, something that's different? Now you have, right? And you've got a little trap in NQ up there. But until that point, we didn't. So we finally made a slightly lower swing point. So it's interesting, now that we've done that, what do we do? Is this a liquidity dip, or are we now going to explore in this direction? So that's what we're watching here. If you see a quick spike down like that, it will as often be a liquidity dip in NQ as a reversal. So you just have to be careful. And one of the reasons why I like looking at large volume trades, and I'm looking across in in NQ to see what the large volume was, is that oftentimes the end point of these big moves will be large volume trades. Okay, so we had really quite a good iceberg here. So we had two icebergs essentially. 127 and 215, even though they're the same iceberg. So they've got 350 or so on the book. And at the top of this, we have 38 or 39 contracts. So it's not quite a rollover, but it's not a huge number. So again, you're not going to get perfect kind of swings in markets all the time. So you can't expect large swings to always end in rollovers, or to be a poor high with a massive squeeze at the tail end of it. Okay, we are now getting up to that news. I'm just turning on my stream for Financial Juice. Yeah, the US import prices 0.1%, so below the 0.5% expected, but the market did not have any reaction, in the sense that the market continued to go up and it continued to explore towards liquidity. So I was saying that, if you've got your 2R, your 2.5R in ES and you'd held on that one, you may well have got 3R already. Yeah, and one of the beauties about this, more structured or more orderly trading is, as I said, that control of risk and the way of getting to your scales without really, really horrible price action along the way. You're going to get some smoother type action in ETH than you are typically in RTH. So you've got still this big bank of liquidity, and at this time of the day, it's still more magnetic than repelling, so that they can see that this band is there. But the closer we get to a big bank of liquidity, the more that is likely to be a wall that will get us at least a temporary reversal. We have a look at the, just having a look where the NQ's settlement. So in every single one of these streams, we always talk about where is settlement. So ES has just gone back up and tagged settlement. So even though I wasn't talking about it, there was clear confluence between the zone where settlement occurred and that iceberg. And so that was yet another reason. And I was said, we were looking for confluence. I was saying it was a double top. And the other confluence was the fact that it was a retracement back up to settlement. So I was not paying enough attention to where settlement was when I was looking for that confluence. I'm just waiting for the CMJs, just typing in something. I'm hoping it's not about how bad the sound is in terms of echo. I hope that is the case. All right, so question is not about audio quality. Good. Is there a particular time when you find the markets a balance between moving enough to provide opportunity to trade? Okay. Right, let's dig out something over here on this screen. Okay. So you've got this, right? You've got two things for ETH that are on my stats box page here. You've got the relative... Yeah, you've got the relative volume. The relative volume is something that updates every minute for me. So I don't tend to keep a graph visible at all times because it takes up too much space. But I know, because I look at this fairly frequently, that when we started off in Asia, that was about the 50% mark, and that there was a considerable jump up in London. So I pay attention to that number. So if that number gets, from 50 up to 80, or if it's, say, well over 100 all day long, I know that you're going to get plenty of volatility. That doesn't answer your question about whether there's a balance. I think most of us are volatility traders. So before we look for balance, we look for volatility, because otherwise we're just trading nothing. And there's nothing really worse than trading nothing, if you can excuse the pun, because basically all you're doing is paying your broker. because the market's not going to go anywhere. You're not really going to get to those multiple R scales, and you'll end up taking entries and exits based on meaningless action. So that there is that one thing, relative volume. And then, I'm looking across at these ranges. I mean, if you look at today, NQ 32 in Asia against 53. I know that's Asia. I know you asked about London, but I'm just saying it's a guide to, you can look at your chart and say, oh, that looks dull. And then you look across at the stats and you say, well, maybe, I haven't seen the big player come into the market yet. So until I see them, the stats worry me. So I'm unlikely to get big ranges. You accept that can change at any minute because you do not know when the big player is going to come in. And in the Asian session, even, again, I'll get to London in a second, they might appear at an unusual time. So, you've got your Chinese open from 9:15 to
500 futures and Dow futures.
Sorry, I'll turn that off.
Higher.
You've got the Chinese open from 9:15 to 9:30 p.m. Eastern. But that doesn't necessarily mean everything. So you might get some great volatile action around then, but then you might also get a huge player that comes in an hour later at 10:30 or 11, and they totally change the nature of that session. And all of a sudden you get great ranges and you get good structured pricing. So I'm just saying that this is useful, but not totally useful. In London, it's the same principles that you apply, that you're interested in the statistics, especially this one and how it changes going into 2 a.m. and 3 a.m. Eastern to see whether people are really coming on board or not. But one of the things that I found is you watch these half hours in Europe. So you watch it's like 40 minutes, the first 40 minutes. At the German Open, you're likely to get some action from around about 1:50 a.m. Eastern, but that might die out by about 2:05. But on really, really good days, it won't die out. You'll have action all the way from 1:50 a.m. through till the US Open 9:30 a.m. And part of the way you see that is these ranges and the volume, and also by having your charts of the correlated instruments that are driving the London session further forward. So you've got your Bund, you've got your DAX, you've got the FTSE, you've got the Euro stocks up, and you can see when they're having crazy sessions or really decent range sessions, you're going to get good sessions or good ranges for ES in that time frame. So I'm saying, so I'm sorry to say, CMJ, that you can't predict. You cannot predict. All you can do is turn up, right? You can turn up and you can expect, you can humbly expect volatility around about the London Open, and accept when it is not there as well as when it is there, but you cannot force the market to give you what you want, and whether that is in terms of great trades that benefit you or in terms of great price action that benefits your analysis, regardless of whether you win or lose. And it's the real, there is something extremely frustrating about that in Europe as well, in the sense that you cannot predict when these big players can come in, because you can't sit there for hour upon hour upon hour upon hour. I've tried. I don't think anybody can. I think there are certainly some people in RTH that can sit there the whole day. But you will often find it's a frustrating experience, because just when you cannot make it and you're out doing whatever you have to do, the market will suddenly pick up and you'll miss all that action. All you can do is say to yourself that you followed your trading plan, you followed your processes, and those trades on that structure did not occur when you were sitting there, so you did everything that was right. That's all you can do. You're writing something else up? Yeah, exactly. No. If you want to sleep, I don't know if you're based in the US or not, but if you're looking for the most predictable times and predictable, again, I use in inverted quotes, US times, it is the Japan Open and the China Open. Yes, the Eastern. So it is literally, if they've had a very good run in a direction, whichever direction that is, up or down, into the Japan Open at 8 p.m. Eastern your time, it is likely that there will be a good reversal, as in a good tradable swing in the other direction within the next 30 minutes, and sometimes it's right bang just before 8 p.m. It could be really, really early and really, really sweet, and it gives you something that is as much as you would have got in RTH. Other times, you can sit there saying, where is it, where is it, where is it? And then all of a sudden it comes along at something like 8:29. In other words, you can't predict it. You can run the stats yourself. You can see that there is a very high likelihood of such a reversal, but you cannot predict when it is going to occur within that time block. And the other thing as well is you're going to get a lot more volatility in that 9:15 to 9:30 p.m. When that real pre-open for China, I call it a pre-open, but it's really open, and you can get some good scalps there. You can get some good swings, but you can definitely get some good scalps. Yeah. But I mean, there's this session as well, CMJ. You've got this session. You've got these huge economic releases at 8:30 that we often have in our session, and outside of that, you have good orderly trades in this 8 o'clock till say 9:15 a.m. Eastern. The pre-market. You've got all those stocks open. You've got SPX options trading. You've got Apple's trading, etc. So you've got the real market is semi-open, and yet it's not crazy unless you've got the non-farm payrolls. And that is it's one of my favorite times to trade. I mean, because quite often I will not have been able to sit there for the time period that I wanted to sit there during the London session. So, because this is now my evening, getting quite late into the evening, it's a bit quieter for me. So, if I was not, in fact, I did take a trade. I did trade towards that iceberg when by the time I'd originally posted it, I got 1 and a bit scales. So I like to trade in this session as well. It's just, I mean, once you've traded part of the overnight session and you know what the Asian session looks like, you know what the European early session looks like, and you know what this pre-market session looks like, you get used to it. It's like a set of 3 dancers. As long as you know which of those dances you're in, you're doing the tango. You're not doing the rumba right now. As long as you know it's that kind of dance, and you also know that you don't do the typical tango during a non-farm payrolls release. At that point, you step aside and you either play a completely different playbook or you don't play at all. So far, they've just been doing, this is partly what they did the other day, which is provide more and more liquidity up, and they're just grinding up. What happened the other day when they did this, even though it was one of those choppy up and down days, was they used a lot of this pre-market buy grind up to then sell it, to sell and take it down quite a way. So it'll be interesting to see if that's what they're doing. So, you often find this where they're just filling in up and up. What we tend to do is then look vertically and look at this column to see, are they getting lots and lots and lots of fuel? And then I will look across and see, how big are those trades that I can see inside Sierra? I'm not seeing anything huge. I think the biggest trade I can see since we started at 8 o'clock, it's about 250. So that's an individual reconstructed trade. It's not going to be 100% accurate, but it's a guide to how big the trades are. And there's nothing huge. So, one of the things that you put in your notebook is that, this could be just absorbing a lot of smaller buyers for a push down later. Or they're doing something in preparation for the 10 a.m. news release. We might switch across to NQ. Okay, yeah. So yeah, this is one of those things that's worth pointing out as well. When you see, you've been going up, and then they place this big liquidity marker as an advertisement in NQ, and you've got this one here at about 15,298. You don't just chase it. You stick to your plan. You stick to your structures. This might well have been another one of those one-tick up thrusts, breakout failures. May have been, or it may have been a double top. It's hard to tell just looking at it like that. But you stick to those structures because, you suddenly think, oh, it's going to definitely get down to there, so you trade in here. That's the worst thing you can do because you're then the fodder for them to squeeze up and up and up. And if there's one thing that NQ does better than any other instrument, it squeezes sellers. So they are so good at that, it's not funny. Maybe people are just bearishly inclined and haven't noticed how well NQ can squeeze sellers. Typical things for NQ to do: squeeze those sellers, and then when everybody thinks it can only keep going up, that's when it absolutely tumbles, and that is the nature of the beast. And that one applies in ETH as much as anything. The most common scenario in NQ is that it will be bullish into the London Open. It will have chopped around or gone down in Asia, and they'll have a nice upswing to either take out settlement or to take out yesterday's high, or to the top of a value zone that had formed from the previous RTH session. Yeah, so they advertised two zones, and maybe you played for the top one, and that's the one that would have paid. And if you played for the bottom one too late, you'd have gotten into a lot of trouble. And part of this session today was to look at how do you know. So one of the things that you're going to see in Bookmap is this, which is I don't know if I can capture it well enough. When I see some diagonal 45-degree type action, which is normally mid-sized buyers in NQ, it's normally intention to go higher. So that's something to be wary of, that you are short there, you're trying to get there. That's a warning sign that you're wrong. Worst thing you can do is let your stop run. Sure, that may pay off occasionally, but it may also break your account on a few occasions, and your broker and your bank manager will not forgive you. So you could be playing for this one down here. All of a sudden, you're back in the green. That is that's a different kind of business to be in. There's a lot of risk involved. If you'd taken a tight entry down here, you should have been stopped out. Otherwise, I would say that you've got very, very different risk modeling from the type which I'd be prepared to use. So the fact that they've advertised this liquidity and that one is likely to get hit does not make it necessarily very easy to get in. You still got to be really, really patient, wait for your structures, and then you might get a wonderful 3 or 4 hour trade because it will go straight into that liquidity. Okay, we've got some iceberg type action here in ES. And again, the beauties of having this thing side by side, let's see if we can just do that and just drag it down. The beauty of having this side by side is that when you have these dips in NQ and ES is only having a little tiddly dip, it's a big hint to you that the dip in NQ is likely to be a liquidity dip and that it will continue going in the up direction. So that's one of those things to use as well. Yeah, it's one of those things that I always have both my Bookmap and my other kind of information side by side, or above and below. It's the same difference. Just having a look at NQ. I think the NQ action would have been far better to trade. Now, if you're going to go micro here, and that is possible at this time of the day, and you're using this as a liquidity wall, and you've got a zone, so you've got, if we draw this as a rectangle, so you've got a little micro zone there, it's not a setup that I talk about. It's just an idea for people that you've got a wall there, so you're looking at now you're looking at a stop around about there, and you're looking to get in the top half of this little thing, so you're really looking to get in about here, and you're aiming all the way down there or close to down there. That is a way of trading slightly duller sessions in thinner instruments like NQ, because when they break this balance structure, they tend to move quite far, and that applies more to thin instruments than it does to thick. Again, I will not be talking about that much, but I just thought on occasions like this where it's a bit dull. And the thing is, if you'd taken that one there, right, and you'd got 1 scale, 2 scale, maybe 3 scales, you're not greedy, you're managing your trade, because you understand that they also advertise liquidity up above, and you're also aware that ES is trading up towards the sell icebergs targets, which has now disappeared, but it was right there a second ago. So you're bearing in mind the context, and you're also looking across at some of the other instruments. So if we've got YM and RTY up and running, and you're trading a little short in NQ, you've got to bear in mind what they're doing. So this might be a little bit risky. So that's when you've got to tightly control your trades. And let's have a look at where we are on the value side as well. I'm trying to speak as softly as I can because I'm worried about that echo, and I am speaking very close to the microphone. So we've got this value that I drew earlier. And I can see on this that you've got a big liquidity up there, and you've obviously got some ES options or a round number up there. And that if we can get out of this zone, then we're back into, let's draw that, we're back into this value. So it's quite clear we're almost there. If we can get back trading up there, then this becomes in play going into the RTH open. Yeah. So if we were much earlier in RTH and we'd had a really good trade up, and I think there is an example if I actually do split this one out, right? Because I drew this one earlier based on where that liquidity, where that value had such a thin little volume node there. And so if you trade up there and you're not quite in that previous value zone, there might well be good shorts. On this occasion, there was. Okay, that's an interesting one, Marius. Yeah, what I actually did, because I reset this up in OBS, is the OBS output is going into Discord. So that may be the issue. It's with a little driver called cable output or something like that. I will ditch that and I will rectify it before Wednesday. But the point is that, as we reach the top of this liquidity, you're looking at your price action in Bookmap and your short-term candles, etc., to see if we're going to get mean reversion type action, i.e. we're going to then rotate back down towards the middle of that value zone and then down to the other side. The first time it does that, that's the opportunity that you're looking for. If it keeps coming back, you're not as willing to take such a trade. But yeah, that's one of the reasons. It's actually a really good demonstration of why we look at value from the previous day. So that's something, again, maybe we'll do a visual strategy session at some point in the next few webinars where we do a flow chart of this trade here. So let's just draw it in. It's this trade here. It's this mean reversion trade here going back towards settlement initially, and then back towards this main volume node from RTH, and then down towards the end of value. So in other words, you have 1, 2, 3 main targets in that trade, and that's a trade where you want to be in for a considerable period of time, and that's the type of opportunity you're looking for when you want to pyramid into trades. It's not something that I'm going to speak about overly in these webinars. It does mean that I don't do it and that I don't look to add if I possibly can, but it's that scenario from the higher time frame or the value perspective that you're looking to say, well, there is a possibility, because this is ETH, that all we're going to do in this session, because it's dull, is traverse value. And traverse value means go from one side to the other. So if I can somehow get in and get in again, I can maximize the trade, and then I do not need to trade at all during RTH. So that is something, it might well be worth doing one of those flow charts to set up that strategy and just describe how you think through that process to create that. But I've just done some of that by talking through it there. We'll just get rid of that one. Yeah, so looking at this, you're looking at this tail, you're seeing basically it's nearly all buyers on this big drive up. And we're getting towards the overnight highs in NQ and ES. In fact, ES now is at the overnight high. NQ is not too far off. In NQ terms, we're only about 14, 15 points off, but ES, we are right at the high of the session. So, that trade that we talked about going into this webinar, which was tagging this iceberg here, if you'd managed to get your 2R and managed to stay in there, there's a possibility you'd be about 6R up by now if you're in that trade. And that is realistic based on the numbers we are looking at and the structures for the setups, being the supply and demand tests, the demand tests that were below, it's being a bit slow on me, being these kind of tests to get back up to test that. This sell iceberg as a target was, very, very clear. I know it only had one in there, but since it was that confluence with settlement, since we had a double top that could have been taken out, there were a few confluence factors in there, and because, just as important, we had accepted that we could easily be wrong, but we were willing to take a risk because of the R multiples and the way we had modeled our expectancy calculator telling us this type of R multiples risk was one worth taking because it would get into that category on that spreadsheet. Where is that spreadsheet? I could pull it up, but probably let's not bother because we're coming up towards the end of the session. But you're falling into that category that bumps up your business model. So it's one of those risks that you want to take. Sometimes what are you doing? You're taking a trade, and why are you taking it? You're taking it to chase money. You're chasing 2 or 3 ticks, or in R terms, you're chasing 0.3 of an R or 0.5 of an R, and you're fretting over it. You're worrying over it. Whereas, and sometimes you've got this one to say, I don't know if it's going to go up. But then you think, hold on a second. The main target here is at least 2R, the iceberg. If I've got my main target, not just my initial target should at least be 1R. If you've got nothing in between, you can say it's 1R because you believe in scales, if that's what you believe in. But you're looking also at the potential that it is going to traverse value and take out that overnight high. So it could easily have got you to the 6, maybe even the 7R if it keeps going up. So it's just one of those things. How would you have stayed in? Once you get past something like 3R, you're not going to manage a trade as closely. You're going to expect this up and down nasty little, try and take you out, and you're going to trail a little bit more gently because you've already made what you wanted to make out of this trade, and anything else is a real bonus. So, but that's an art to itself. It's not something I think I could ever really go into too much detail in these webinars. But but taking those trades where the main target is at least 2R or 3R, that is what we really want to do, because that gets our expectancy calculator boosted up and gets us a really good business plan. Okay, we're coming up to 9 o'clock. Yeah, I think it's likely to keep going up. We've had this little stop run just there, but we've got this liquidity and more liquidity, suggesting that they're going to just try and take it a little bit higher, but we shall see. I cannot predict the future. I apologise again for the audio quality. I did really try today before the session. I think I put in at least an hour's worth of setting up those filters. It's just a bit of a disappointment that they made the sound worse than better, because I was hoping it would have been really clean. Anyway, I hope you all have a lovely weekend and good trading tonight if you are trading in the US session. That's tonight my time, but morning your time. Thank you again. I will end.